All right. Good morning and welcome to the main management weekly market note for the week that was ended June 12th, 2026. Let's get into it. As usual, our offerings performance was far more positive than negative. You can see on the on the bottom there, the trailing weeks, only commodities were down for the kind of broad indices. And then on the sector side, comm services and energy barely negative, led by a big move in materials and consumer staples with kind of a little bit of maybe risk off, I think, even despite the kind of strong performance. Year to date, energy and tech are dueling it out at the top. Energy has really been driven by that rise in oil prices. Those are now basically at lows several weeks since the Iran crisis, or since the war in Iran. So we're probably see some softening in the energy sector. But as it stands, up about 30% year to date, and commodities benefiting from that as well, up 33% year to date, call it. Recession dashboard, not a ton changed here in June. We did put inflation to red, given what we're about to get into. So let's go there now. CPI was out for May. You see on the left there, the headline number decelerated to 0.47% month over month. However, that's still three pretty outsized gains, even without the two prior big ones. That would have been the biggest reading in a couple years. So looking at that year over year figure, it's now up to 4.17%. That's the highest since May of 2023. This month, energy accounted for basically 60% of the increase, and gas prices were up 7% month over month. On the right, you've got the core figure. That also decelerated to 0.21% month over month, below forecasts. So that's kind of why we put this as neutral, as the core figure was reassuring to see coming in below forecasts. And it's now up 2.82%. That's the highest since last September. Overall, though, not great to see inflation kind of trending higher, as we'll get into PPI as well. Core goods inflation declined, which is perhaps indicative of waning tariff effects. So the concern is that you've got those kind of tariffs offsetting potential rises in energy, and then the tariff effects will wane further and have less of an effect. So we'll see again next month, where we're probably going to see some continued higher trends on the year over year basis. Certainly,
I will say, like, over the weekend we got some positive news on the Iran war. Obviously, the Strait of Hormuz looking like it's going to reopen. It's kind of been in this state of flux for so many weeks, but maybe nearing the end, finally at the light at the end of the tunnel. Which is a positive for oil prices and gas prices probably going lower. It might take a month or so, or 2 to 3 months to actually feed through to the CPI. But as long as the core CPI, which is X food and energy, kind of remains at a stable level, I think it's overall a positive.
Yeah, agreed. Within the CPI, energy on the left there, you can see 3 big months. It's now up 23% year over year. That's the most since August of 2022. I mean, that's sizable. That hurts everybody. You feel it at the gas pump. It's rough. In the last 3 months alone, energy prices are up nearly 20%, and goods CPI has accelerated to 5.4 year over year. On the right, you can see also services are kind of coming to play, for lack of a better term, but they were up 0.3% month over month after that outsized kind of 0.6% reading in April. They're now up 3.5 year over year, call it the highest since last September. And then, the downside here is real wage growth is now negative, as wages are up 3.45, below that CPI year over year figure. So hopefully, again, this can kind of pull back a little bit in the coming months, and then the wages actually are starting to accelerate a little bit. So that's a good sign. But again, not ideal. People don't like that at the pump and feeling that their real wage growth is negative. On the PPI side, that was out the day after CPI here. Headline on the left posted another big increase, 2 months in a row, up 1.06% month over month, well above forecast for a 0.7% increase. April was revised down from 1.38, so that's positive, but again, still 2 back-to-back readings of 1-to-1 there. You can see on the left those 2 bars. Now it's up 6.4% year over year, the most since November of 2022. Again, energy driving things here. We'll get into that in the next slide. And then core PPI on the right was up 0.4 month over month, slowing from April, which was also downwardly revised, but that's now at 4.9, which is the highest since January of 2023. The issue here is that PPI tends to feed into CPI. So we're really not, again, we're looking a couple months out now. July, August, September, call it, hopefully for some kind of abatement in the rising CPI. But for the time being, June's probably gonna continue higher when we get it next month. On the left, you can see energy was jumped 10.7% month over month. That's its biggest monthly increase ever. 2 of the last 3 readings have been above 10%. Similar to CPI, energy is up 31%, or sorry, PPI is up 31% in the last 3 months alone. And that energy figure pushed goods PPI on the right there in orange up to 2.8 month over month. That's its highest monthly reading ever as well. And they're now up 10.3%, call it year over year. That's the highest since October of 2022. So again, June's probably not going to be great, but hopefully July, August later on, we get a little bit more relief. On the NFIB small business optimism, that index ticked lower to 95.3 in May, missing forecasts for a 96 reading and the lowest since October of 2024. The sales outlook deteriorated while actual sales ticked higher, but are still net negative, and hiring plans fell to their lowest level since May of 2020. Again, I get, the hiring plans are a little bit worrisome, but the employment market from the kind of BLS releases and the ADP and the unemployment claims continues to chug along pretty well. And you saw that in that ADP figure, what was it, last week, that small businesses have led hiring. So it's a little bit weird here that we're seeing like ADP reporting that small businesses are leading hiring, and yet they're not planning to hire. I'm not sure what to read into that, but it's kind of incongruous for sure.
It's kind of reminding me of this trend you've had where it's the hard data versus the soft data.
Yep.
Hard being, actual things people are doing, whether it's hiring someone, paying for something, whatever. Yep. Soft data being like, how do you feel about this thing? Yep. Are you going to hire people? And you've kind of seen that spread where overall optimism, overall kind of feeling about the economy has been negative for a lot of consumers, and in here, obviously, for small businesses as well.
Yeah, agreed. On the right there, this is a little bit concerning. This is the pricing situation where it's the net percent of firms raising versus lowering prices. And you see both of those breaking out to kind of multi-year highs there on both the firms that are reporting they have raised prices. So 34% more firms have raised prices, 36, and then a net 34% are planning to raise prices more than lower them in the next 3 months. So that's not great for consumers. But again, you've seen, we got retail sales this week. You've yet to see a real slowdown in the spending. Yeah. And again, this is kind of coming back to that K-shaped economy where the kind of, that upper line of the K is continuing to spend and they're responsible for the bulk of it, while the lower side is probably what's responsible for the lower sentiment and not feeling as great because they aren't able to spend in the way that they want. On the trade balance here, the trade deficit narrowed to minus 55.9 billion in April, so it's deficit less than forecast for 56.1 as both imports and exports continue to rise. Exports hit another all-time high at 327.1 billion, and imports are back up to 383 billion. That's their highest level since that kind of tariff-induced pull forward we saw last spring. So again, this is positive. This is indicative of strong continued demand both domestically and internationally. And both, imports and exports have posted 3 solid monthly gains. You can see on the right there. That's consistently, they're both consistency over the last couple of months and trending higher, which is a good thing. Imports were led higher by capital goods, mostly computers, semiconductors, and telecoms equipment. Kind of no surprise there. No surprise there. And then finally, touching back on sentiment a bit, the preliminary May reading for Michigan consumer sentiment ticked up to 48.9 from the all-time low of 46.1. A little bit higher than that. But anyways, current conditions are up 48.4 and consumer expectations are at 49.3. So that breaks the streak of 3 straight down months for the index. But again, sentiment is clearly still on its butt here. Yep. Good to see, though, unsurprisingly, but inflation expectations came in. You've gotten some of this, responses. The timing of the survey depends on what news came out. So again, I would wager these will come in a little bit further with the Iran war kind of developments, assuming that it continues to trend in a positive state, positive manner. But the 1-year inflation figure now down to 4.6 from 4.8, and 5-year down to 3.4 from 3.9. But you can see that in contrast to CPI figures, which are moving higher. And then for the existing home sales, they rose to 4.17 million units. That's seasonally adjusted annual rate in May, above forecast for 4.07 figure. On the right there, you can see the month-over-month readings. 3 of the last 4 have been positive. That 3.2 is the best in a couple of months. And best since December 25, and that's third increase in the last 4 months, as we said. South and Midwest saw sales improve. I guess the thing here is you can see on the left that darker line has just been kind of range bound. But it's good to see a move positive with the high elevated rates and elevated prices, which have just been, they've resulted in that kind of sticking on the floor here. So it's been tough to see any meaningful move higher in the housing market.
Yeah.
Both existing and new, until we get some proper relief in rates and prices, which have shown no signs of showing up so far.
Yep.
So we'll see how that plays out. In summary, headline CPI now at multi-year highs. PPI, same thing. Sentiment remains, kind of muted in the business side and certainly depressed
Mhm.
on the consumer side. Imports and exports, continuing to chug higher, and then finally, as we just mentioned, existing home sales stuck. This week we get industrial production, building permits, housing starts. We get import and export prices, retail sales. The FOMC's quarterly meeting is out. That's Warsh's first as chair for June. So we'll see. I don't think anybody's predicting any change here, but markets are pricing in, call it 1+ hikes between now and the end of the year. And then we get some manufacturing indices as well on Thursday, and we're all off on Friday because of the market holiday.
Yep.
So I think that's about it. Thank you for joining us as usual, and we'll talk to you next week.
Thank you.